Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Right now, we are laser focused as we just had our weekly close, and we are preparing to end the month, the quarter, and the year as well. Paying close attention to not only Bitcoin, but Ethereum and a couple other alts as well. Paying close attention also to crypto market cap and our Bitcoin dominance, as something we have been discussing recently has come to fruition. So definitely want to talk about that. So going to go ahead and get started, I think, today with crypto. So just taking a look first here at the Bitcoin futures chart. So obviously, futures was closed from, Thursday night or whatever, Thursday close on until just a little bit ago here, opened back up. And we see basically that futures closed right up here at 51,095. So basically 51.1. And basically all the movement over the weekend resulted in price action ending right where it closed on Thursday. So essentially nothing happened over the weekend. It just moved around a little bit, but ended up in the same spot. What is worth note though here on the daily futures chart is that last close from Thursday had us close at the 8 moving average, above the 21 moving average, above the 200 simple moving average, and above the 200 exponential moving average. So we are back above all the moving averages except for the 8, which is good. The 8 we would expect to act as at least temporary resistance, potentially come back down and retest the 21. We'll notice also something worth note is that we have been discussing is for the first time in this entire trend on the daily, going all the way back to basically July of 2020, that for the first time we see the 200 simple on the 200 simple on the TJD master has rolled over negative. So it now has officially a negative slope, but we are still above it. So all we have to do is just go sideways above it for long enough and it will flip back to blue. So that is worth note, but okay for now. On the daily, we are getting a hard buy signal. We have exited the bearish control zone on the TJD Jewel Thief. And then also we have a bunch of green histograms on the TJD TD MACD. So overall, looking okay. We are above our key moving averages with the exception of the 8. And overall, looks decent. We would expect more of a violent move when we bounce off of the moving averages, which is worth paying attention to. And also we have had quite a few retests now of these moving averages. So we had that initial sell-off when we put in the peak, broke down from them, we reclaimed those areas, and then we retested them. This time when we retested them, it was a fairly strong test. We spent only a few days on the 200 simple and didn't even get back down to the 200 exponential. That's what you want to see. Even if the price action doesn't come down as low, you want to see that it's testing less and less as people are aggressively buying it up. So this is sort of a, yellow light. It's kind of saying danger or warning signal, as we did come down the second time on this test here, not only to the 200 simple, but all the way to the 200 exponential. And we have spent much longer this time consolidating at that level. So again, what we want to see with support and what we expect to see with resistance is a violent move away from them, as essentially the market is rejecting that price action. So if the market's going to reject lower price action, reject lower prices, we would expect it to get aggressively bought back up and then continue to the upside. If we are below a moving average and we're going to get rejected, reject basically higher prices, we would expect the price to move back up to that moving average and then get pushed away from it violently and quickly. So it's definitely worth note that we are spending longer periods of time consolidating at those levels. But again, we're at a crucial decision point in the market. We could very, very easily continue to the upside and have an extended bull run. We could also just as easily have already topped out and be preparing to have a violent downward move. So definitely worth paying attention to both ways. So that's our daily chart. But now, as we're getting close to, the end of the month, the end of the year, etc., I like to kind of zoom out and take a look at the big picture. So let's look here at the weekly chart and see what's going on. So we see something very important that, again, no one is talking about because people are looking at shorter time frames. People are just, talking about what they want to happen, not what they actually expect to happen or what the chart is telling us. We know that the market's going to do whatever it wants to do. What we do is, like a detective, we look for the clues that the market is giving us so that we can take advantage of those moves and position ourselves before the market makes those moves. So we basically find the market makers, we find the movers, we find the whales, the people that determine price action, and then we do what they do. But they leave us a little clue of like breadcrumbs, and we have to follow that trail of breadcrumbs and figure out what's going on. But see, everybody eventually figures it out, and that's where the momentum comes from. What we do is we figure it out ahead of time, we solve the case, and then we position ourselves so that the market follows us, or basically comes to us, as opposed to us chasing that market. So here what we see happening is, obviously, we broke down and saw the weekly 8 and 21 cross to the downside right here on June 21st. And that is a bearish cross of the 8 and 21 on the weekly. We were able to save that cross and save the trend on August of 2021. And now here we are once again below these levels, and we're in the danger zone. We are literally like hours or a day or two away from confirming that cross back down to the downside. So let's just kind of zoom out and see, is this something that happens often? Is this a rare occurrence? Is it something we should be worried about? Well, in order to go into a bear market on a weekly time frame, this is the futures chart going back to the end of December 2017. We see that in order for that to happen, this is when it opens, so we don't have any previous price action on the futures chart. But these had to cross to the downside. They had to have that cross, and that's what flips them over to pink and red. So in order for us to have this bear market and this massive drawdown, the 8 and 21 had to have a bearish cross. We see here we crossed back to the upside in April of 2019, and then we had a beautiful move back to the upside. But then once again, we had a cross down here of the 8 and 21 in October of 2019. That cross was only for a few weeks, and then we actually were able to push back to the upside one more time. And then you'll note here that this is when I called for an aggressive move to the downside, and then also, everything kind of happened with the capitulation of the stock market, which I fully predicted based on multiple actual technicals, including our semiconductor space, including our yield curve inversion, including basically all the things that I laid out in that Wyckoff distribution video with the perfect price targets to the downside of not only crypto, but also, Bitcoin, stock market as well. So we saw this coming, not because I could see the future, not because I'm a soothsayer, not because I read a tarot card deck or something like that and was able to see the future, but because the market told us. The whales, the market makers, they told us what was going to happen, but they left us little clues. All we had to do was follow those clues, and then the obvious conclusion was a massive dump was incoming, which played out perfectly. And this actually told us ahead of time, only a couple days, what was about to happen in the stock market. So then here, once again, we were able to cross that back to the upside around the end of April in 2020. And then we noticed from April 2020 until that cross that we recently had after that initial top in crypto in June of 2021, we had a massive rally to the upside. So again, in order for us to go on a massive rally to the upside, these have to cross over green. In order for these to have a bear market or massive drawdown, these have to cross over red. So we know that basically, obviously we don't have the initial cross just because of the time, but we know that initial drawdown was 85% for the bear market of 2018. We know that this drawdown right here from, the peak of price action to the bottom of this initial drawdown was 55%. We know the one that followed after that from the peak of this price action to the bottom here was once again 60%. And then finally, our fourth and final cross that we had take place from the top here at 64,000 to the bottom was a 56% drawdown. So what does that tell us? It tells us that every time we have seen this weekly 821 cross to the downside, we have had an absolute minimum of a 50% drawdown from the peak to the trough. So it's definitely worth paying attention to that we could have a potential 50% drawdown. So while it's not 100% fact that it has to happen, we have 4 specific examples, and in each one of those specific examples, we had a drawdown between 50% and 85%. So definitely worth paying attention to. So now here, what would we expect? What would that look like if that happens? If this crosses to the downside on the weekly, what would that price action look like? From peak once again to trough, from the top to the bottom, a 50% drawdown would take us down, which would be the absolute minimum we would expect based on the technicals and previous price action. That would take us down to 34,255. The previous one, or the next one, was 54% roughly. That would be somewhere around 31,000. We could expect potentially an 80% drawdown, as that was what happened on one of these instances as well. So the 80% drawdown would take us down to roughly 13,700, and a 85% drawdown, which sounds unheard of, and I know probably people will get upset or argue with me and say that's not possible, it'll never happen, you just don't understand. That would give us a drawdown of $10,335 Bitcoin target. But Bitcoin will never go to 10,000 because institutional money and to believe in it and inflation. Sure. Okay, fine. All right. I have actual mathematical, statistical proof of what has happened 100% of the time with 4 specific instances. You have fundamentals and belief, hope. None of those things are measurable. I can't write down on a piece of paper the statistical probability of hope or prayer or faith in crypto. I can't write that down. I can't quantify that. I can't use that in any way usefully. So what we're going to do on this stream, what we're going to do today when we look at these cryptos is we're going to look at actual factual information. We're going to look at math. We're going to look at, instances of things taking place, probabilities, risk reward. We're going to look at that, and then we're going to quantify it, and then we're going to use that to actually make money. So while this is not financial advice, I'm not your financial advisor. These markets are extremely volatile. Do your own research, trade responsibly, but educate yourself first. If there is a statistical probability of 100% over 4 instances that if we get this cross to the downside, we will have a drawdown between 50 and 85%, that's a key piece of information I would like to have before I make any, bets or trades or anything like that. So again, while it does not have to happen, this time could be different. It's worth noting. Also, we will note that if we do have a powerful drawdown to the downside, one, we have a key support level, which was our previous low right here based on weekly closes at 31,750, which also is right around that 50% or so drawdown. And then we'll notice also that the 200 exponential and simple are down here. So once again, from peak to trough, roughly that would be around, depending on how long it took us to get there, etc., that would be around a roughly 70 to 73% drawdown. And then we also have key resistance / support back here at that 12,800 level. And then we have more key support based on these little peaks, resistance support right around that $85 level. So we're seeing some confluence take place at a couple of these key levels that are worth paying attention to. And now again, I'm not saying that this has to happen, but let's look at this chart. This one has limited information. We're on a weekly time frame. Let's see if there's anything else kind of jumping out at us. Okay, so we see here we had a sell by sell signal. We left the bullish control zone, and then we had that cross to the downside. Here we have a hard sell signal. We left the bullish control zone, and now we're looking at that potential cross to the downside. So it's worth noting that there's a possibility, that we're going to get that cross, maybe over 50% based on what's happened previously. Now let's look also here at the actual levels of these various peaks. So here we had the peak on the stochastics up here at about that 90 level. And then here we have a peak on our blue stochastic at about that 86 level. And we see those peaks correspond with, our price action right here at roughly, 62,500 or that previous top. And then here we see our weekly close at 64,800. So we have a high and then we have a lower high, but on price action we have a high and a higher high. So again, we're displaying weekly bearish divergence. Let's note right here also on the TJD TD MACD, we have a bunch of red histograms. We cross below the blue slope line. We cross below the 0 line. The slope line flips over red. But then we actually base out based on triple bullish divergence, and then we have a move back to the upside. But we see all those things lined up and gave us bearish signals as we entered into the bearish control zone. But the bulls were able to save the price action. We were able to capitalize not only on the bearish divergence move to the downside, but the bullish divergence move to the upside, and then able to once again predict the top almost perfectly based on our 1.618 Fibonacci extension of the previous bull market high. So again, using technicals, using math, using statistics, using all these things, we've been able to capitalize on all these moves of the market absolutely beautifully. And, it's no secret that, we've been right consistently throughout this bull run, throughout these markets, not only with the easy price action bull market moves to the upside, but getting out of way and capitalizing on moves to the downside, some of which are violent moves as well, as this was, over a 60% move to the downside, and we basically got out at the top. So now here we're seeing that same signal again. We have a peak on the histogram. We see multiple red histograms in a row. We have crossed below the slope line. The slope line has flipped over red. So the last time that happened, we were able to save the price action. We were able to rally and then put in a new high. So it's not impossible. It's not unheard of that we would do that once again. But we know that now we're displaying bearish divergence. And what does bearish divergence mean? It means that the moves that have taken place between price action and what we're seeing on the indicators or oscillators don't line up. And what that means is we're using less energy to get the prices higher, and that's not good. That's not sustainable over time, because we continue using less energy, we continue putting in higher highs, we continue using less energy, continue putting in higher highs, and then eventually price action breaks down because it's not supported by adequate price action on the chart to line up with the amount of energy that these moves are taking to play out. So again, this is our weekly chart on futures, and we're seeing here a bunch of yellow lights or red flags or whatever you want to call it. So it's worth paying attention to and, being cautiously optimistic, whatever you want to call it. I obviously have a channel that I have put out content on for multiple years based on crypto and have branched out into stocks, based on, what people are interested in, or, technicals, fundamentals, market analysis, occasionally some politics, etc. But please remember, my channel has and always is and has always been crypto trend trader. There's a reason. It's because I like crypto. I believe in crypto. I'm bullish on crypto on the macro, but I'm also a trader, an investor, and I care about what's actually going to happen and making money, not just hodling and believing and wishing. I don't want to just hope. I don't want to just believe in something because it sounds good or it makes me feel good inside. No, I want to use technicals and I want to make money. That's what this is all about. This is about making money for me. It's about trading. It's about, creating wealth, preserving wealth, and, creating a better life for myself and my family. That's what this is about. And the channel is about me sharing everything I have learned, my life's work, my dedication, the time that I've put into these indicators, technicals, learning all these things. This channel is about sharing that with the community. So for anyone that's willing to listen, and we see there's, not that many people in comparison to, a channel that comes out here and just says, we're going to the moon, we're going to 10,000, 100,000, 6 billion because Jack said so, because Kathy said so, because there's no reason not to, inflation. They just blurt out buzzwords to get clicks and get views. But most people just want to look at a little 5-minute or 10-minute or 15-minute video with a funny clip or some entertaining little meme or whatever. And then I tell you that you're going to invest $1,000 and you're going to be a millionaire. That's what people want. They want hope. They're selling a dream. They're selling hope. They're selling bullshit. And people are buying it. People buy it all day long. Nobody wants to put in the work. People don't want to go to school. They don't want to learn. They don't want to get educated. But the truth is, the time you spend learning, the time you spend educating yourself, that's time invested in yourself that will literally last you indefinitely. And you can use this on any market, on any asset, on any technical analysis, could be used on anything you want over time. You can use it on YouTube analytics. You can use it on cryptos. You can use it on whatever you want. You can use these things that we learn here, the moving averages, the momentum, all these different things, Fibonacci levels. They're applying to all different types of things in life. That's why it's so important. So now let's look at our Bitcoin Bitstamp chart. We looked at the futures chart. It told us a couple things. Let's see what kind of confluence we have here with our traditional chart and just kind of see, you know, what we can expect. Is it telling us the same thing? Is it telling us anything different? So here we have on the most recent daily price action, we have reclaimed the 8 over the weekend, reclaimed the 21. If we stay above the 200 exponential and the 8 and 21, they're all lined up perfectly at 50,000. So if we literally just stay above them long enough, their support will get the 821 cross back to the upside. They'll flip green. We have the 200 exponential, 200 simple, both have positive slopes to the upside. Everything's green. It's gravy. It's good to go. All we have to do is just hold this level for a little bit, and this will look bullish on the moving averages. So now next we have hard buy signal. We have powerfully angled Stochs to the upside, preparing to potentially enter into the bullish control zone. So it looks good overall. We have a green histogram approaching the 0 line above the slope line. The slope line is still red. But again, if we just maintain above this level for long enough, once again, it will flip over blue. So everything looks gravy. It looks good on our Bitstamp chart on the daily. And we see once again that just using this simple indicator here, the TJD Master, we can look at our previous bull runs and we can see how consistent this is. Well, what do we see when we look at this on the daily? We see when it's green, we're in an uptrend. When it's blue, we're in a bull run, bull market. When we see like the little bit of red show up along the way here, we see, you know, basically that we're having a powerful pullback, and we know that along the way during these bull runs that the 200 exponential and simple will act as support. Once we break down from those levels, once the slope flips over red or pink on the 200 exponential and simple, we go into a consolidated bear market. This was our 2013 bear market, lasted well into 2015, and then once again, when we flipped the 200 exponential and simple back to the upside, we went on a parabolic bull run to the upside. We eventually peak out, and then the same thing happens. And this is the top from 2017, and then this is our 2018, you know, basically 2019 bear market, and then once again, we flip back to the upside. We have a little hiccup right here with the CVD dump and everything, but then we reclaim those levels, and then again, we move back to the upside. Go into a parabolic bull run, start to show a little weakness along the way, and now here we are. We're at an inflection point. We're at a key point in time to pay attention to. Every time we came up on a situation like this, this was an inflection point, whether or not we would continue to the upside or whether we'd break down and that was the top. This was an inflection point, whether we would continue to the upside or we would break down to the top. Inflection point once again, inflection point once again, and now here we are once again at an inflection point. This right now, what happens over the next couple days, weeks, you know, month or so, will determine the direction of not only Bitcoin, but the entire crypto space. And we know based on the correlation between Bitcoin, crypto, and stocks, stock market, etc., we know that the correlation is extremely high. As a matter of fact, it's the highest it's ever been. And of course, that's expected because as institutional money flows in, we know this has become a speculative risk-on asset that is directly correlated to the stock market, highly correlated to tech stocks or, you know, speculative investments and low rates. So that's fine. That's exactly what we expect from Bitcoin. This is not digital gold. It's not a store of value. We know that. You know, it's fun to argue. Yeah, it's digital gold. It's a store of value. It's the future because it's outperformed this. It's done that. That's not what this is. This is not digital gold. This is not a store of value. This is the best performing speculative asset or asset class in existence over the past, 11 years. And that's fine. As long as we know that that's what it is. And we do know that. We know that based on technicals. We know that based on, charts. We know that based on performance. We know that based on math. And that's totally fine. But we're accepting it. We're real about it. We're truthful about it. We're not going to lie to ourselves and say that this is a store of value the same way that gold, multi-thousand-year-old bricks of, metal that are pulled from the ground using manual labor. We're not going to act like this is digital gold. Just because it was written to mimic digital gold through artificial scarcity. No, we're not doing that here. We're going to be real. And that's fine. Because when we accept reality, we're more able to grasp the concept of what's happening here and what's likely to happen and the potential for future movements. And that's the most important thing. Because the truth is, at the end of the day, I don't give a damn how many Bitcoin I have. I don't care how many Bitcoin are in my wallet. What I care about is the value of my investments. I care about my bank account. I care about my wealth. I care about my standard of living. I care about my family. I care about that. I'm not on the Bitcoin standard. I don't expect to be on the Bitcoin standard anytime in the near future. Okay, I had a close friend, close relative actually, of mine ask me, what's going on with crypto? Is it still going to be the currency of the future? Should I still be investing in this? Should I stay invested in it? What's the deal? What's the LD? The lowdown. And you know what I said? I said, crypto is 100% a speculative asset. And this person said to me, well, I thought it was going to be the money of the future, so I wanted to have some of it in case it wins and becomes the money of the future. And I say, okay, if it's going to be the money of the future, we'll be able to just go out and trade whatever we want for that money so that we can spend it, right? And obviously the answer is yes. So I said, so then the only reason to be investing or purchasing or speculating on the money of the future is to make gains, to gain wealth. Otherwise, you can just literally, like 6 months from now, if Bitcoin rules the world and everybody's using Bitcoin to buy, coffee and cars and houses, and Bitcoin's on the Treasury's balance sheet and the Federal Reserves are all trading in Bitcoin and everything's priced in Bitcoin when you go to the store, and the Bitcoin has won. It won everything. Are you going to be able to take your dollars? Are you going to be able to take your currency, your gold, your whatever? Are you going to be able to trade it for Bitcoin so that you can use Bitcoin, so you can be part of the new Bitcoin standard, the system? Yes, 100%. Or else it won't work. If nobody can get Bitcoin, if you can't buy Bitcoin, if people can't sell you Bitcoin, then it'll never be the standard. So literally, there's no argument that I can find for crypto right now, for Bitcoin specifically, other than it being a speculative asset. Now, some cryptos have useful technologies, disruptive technologies, etc. DeFi or smart contracts or, whatever, trustless payments. There's tons of other things that will give crypto strong fundamentals in the future. But right now, that's what they are. They're fundamentals. They're speculations. So that being said, we're at an inflection point on a speculative asset, and we know what's happening potentially in the future with the raising of rates and the easing or tightening of monetary policy, and what that potentially spells for highly risky or leveraged markets, etc. And now what we're seeing is at an inflection point at the end of the year, at a key point in time when we're expecting, or we've already been told that there's going to be $120 billion worth of purchases for treasuries and mortgage-backed securities tapered. So less purchases taking place, less support by $120 billion per month, all the way down to zero over the next basically like 3 months at this point in time. And then potentially 1, 2, 3 rate hikes, potentially, selling assets off the balance sheet of the Federal Reserve, although I think that's unlikely to happen. Regardless, those things are headwinds for crypto, for tech stocks, for the markets. So what we need to pay attention to is, what are the whales telling us? What is this chart telling us? What are the markets telling us? Let's look here. We know for a fact that Bitcoin was created around, roughly 2010. We know it topped out in 2013, roughly 3 years later, and then went into a roughly 1 year bear market. We know it then went into, once again, the equivalent of a roughly 3 year bull market, topped out in 2017, came back down and went into, a roughly 1 year bear market. We know it then went up here again, bull market, potentially topped out. We don't know for sure yet, but now we could potentially be going into a, 1 or so year bear market. So now, obviously this is a crazy busy chart. Let's flip over from the daily and let's go to the monthly and take a look at what we see is happening right now. So obviously this is a lot going on, but this is our deep dive on crypto, and I really want to pay attention to it because it's super important, especially for those that have not seen this chart or don't know about this or understand this, etc. So, here off the side, we can see, I'm trying not to block it with the computer screen there, but here we can see basically this run up is from 2011. So there's a tiny bit of price action that is not on this chart, but essentially this low right here is at $2.21. So I'm just going to push past that. And then what we're going to pay attention to is each of these potential 3 drives up here and what they tell us, what we could potentially look at and, get from them. I also want to add in a little bit of time cycle analysis, as that's something that we often see people do, but I don't know if they just don't understand it. I don't know if, they're just saying what they want to say or want to hear. Regardless, let's pay attention to it and kind of see what that offers us as well. We see here we have our peak, which is the top of the 1, and then we have the next bull market peak, which is the top of the 3. I'm going to turn those red, and those are our vertical lines here. And we're just going to pay attention to what those are telling us. So obviously we only have 2 data points, but if we project out that 3rd data point into the future based on these 4-year cycles that we talked about, where we basically have a peak, a trough, and then potentially another peak, what does that tell us? Well, it lines up almost perfectly with where we're at right now. So people talk about lengthening cycles and all this stuff. Well, if you look at the actual code for Bitcoin, there's a halving that takes place roughly every 4 years. And no matter how good people's computers are, or how fast they mine Bitcoin, or how many people mine Bitcoin, or how much energy or effort, or how many, terawatts or gigawatts, or, whatever metric we use to figure out how efficient these computers are at securing the Bitcoin blockchain, we know that it's set to readjust to make sure that these halvings take place roughly every 4 years. The halving being the block reward cut in half for those that successfully mine a block, which takes roughly every 10 minutes, which is what the readjustment that takes place, ensures. So while we have short periods of time when there might be extra miners online, so blocks are being mined in less than 10 minutes, we know that the system resets itself based on the amount of miners so that it takes roughly 10 minutes again. And it does that periodically throughout this time period. And then we know that when that lines up, it happens every 4 years roughly, we get to that halving event. And then we know roughly every 4 years, we see this peak taking place, potentially lining up with what's happening right now. We see every 4 years, the halving event takes place, and then we begin into a bull run. And then, essentially into the future, we would expect the same thing to take place as well. So we have clear code. The Bitcoin code is literally built to have 4-year cycles. So while it is correlated with the stock market to a high degree, while most cryptos are correlated to Bitcoin, we know that designed into the code, built into the code with math by the creator of Bitcoin, that this is designed to have 4-year cycles. So the argument, the idea, the whatever fantasy that there are lengthening cycles, it doesn't actually make sense. We have never seen a lengthening cycle. There is no lengthening cycles. We've never seen one take place. Could it happen in the future? It 100% could. Is there any reason to believe that it would happen in the future? No, there's not. There's no reason at this point in time. There's no proof. There's no breadcrumbs. There's nothing telling me that we're going to have lengthening cycles into the future. You could argue that we'll have lengthening cycles because there's going to be more money. Sure, maybe. You could argue that institutional money, so there'll be lengthening cycles. Sure, maybe. You could argue that the bigger the asset gets, that the longer the cycles will last. Sure, maybe. But we're not seeing any of that take place. As a matter of fact, we're seeing the opposite take place. In the stock market, we're seeing shorter cycles. We're seeing shorter time periods to recover from bear markets, from recessions. So if anything, you should argue that we're going to start to have 2 or 3 mini cycles within each one of the larger cycles based on actual factual proof and, math and, measurable things. So if anything, let's say we have shortening cycles and decreased volatility. Those are things that we could actually prove, based on experience, based on math, based on science, based on, actual things, not just some fantasy that we're going to have a bull run that lasts for 30 years and everybody makes $1 trillion. It's not realistic because there's no proof. We can hope it. We can believe it. We can wish it. We can pray for it. But is that going to help our chances? Is that going to help our wallet? Are we going to make more money if we believe in lengthening cycles? No, not if they don't come true. So believe in whatever you want. We can believe in Santa Claus. We can believe in lengthening cycles. We can believe in whatever we want, but it doesn't mean it's true. So let's look at truths. Let's look at measurable things. So what do we see here? Let's focus in on this first cycle from 2000 and basically from inception of crypto, although the Bitstamp chart doesn't go back all the way. There is some previous price action, but it's essentially irrelevant because at this point in time, we're looking at Bitcoin at $2. So if we look at Bitcoin at $0 or a penny or whatever, the difference between what difference that makes from a penny to $1,463 is irrelevant because the percentage is so small, it would make almost no difference on where these lines would be drawn because we're on a logarithmic scale chart. So it's taking into account the percentage gains, percentage moves, etc. So we see here from this initial bottom, we see to the top right here that we have a Fibonacci in place. And that is our green Fibonacci right here. So while we're paying attention to it, I'm going to highlight it and make it very clear so that that is what we're paying attention to. And in the meantime, I'm going to make our blue one less clear. So here we have from the bottom to the top, and then we have a retracement take place. We have bottomed out at the 236, and then we have one more capitulation candle, push back down almost to the 382, but in between the 236 and the 382, and then it gets bought up. We eventually go back into a bull run and then continue to the upside. Okay, that's great. So that is our first 4-year cycle with the 236 retracement. Well, somewhere in between 236 and 382 retracement. We then see, we're going to look at this little red area right here, and we're going to pay attention to this. And again, I'm going to make this a little bit brighter while we're paying attention to it. So, oh, wrong one. Sorry, again, it gets sort of busy here with all these, but it's important to pay attention to them. So we see here from our top to our bottom that we have a retracement back up to roughly the 618 of the actual drawdown. So 61% move back to the upside after the pullback. And then that tops out, and then we continue into the downtrend. So, you know, that one's less important, but worth noting. And then the next step that we have take place is our yellow Fibonacci right here. And again, we're just, right now we're laying the groundwork. You know, we're laying the foundation for what we could potentially expect to happen into the future so that when we get to our current price action, we can analyze it based on, once again, facts and statistics, not just some fantasy that we're making up where Bitcoin can never go below 20,000 because it would hurt my feelings. So here we have from our top to our drawdown, and then from that drawdown here, we have basically to that next little top, which was slightly under the 618 retracement of the actual pullback itself. So from that point to the bottom down here, we can project that move based on Fibonacci extension targets, and we see that we base out on the monthly at the 1.618, but we actually have a push down close to the 2.0 Fibonacci extension. So 2 times the distance of the move back to the upside. Okay, so again, worth noting, worth paying attention to as we look deeper into this Bitcoin chart. So then the next thing that we have take place is, obviously we finish the pullback. It comes down somewhere between the 236 and the 382, and that is our initial cycle over. And then eventually we cross back to the upside and we begin our next bull run. That is our wave 1 of our Elliott Wave 5-wave cycle, which also lines up with the 4-year cycle that is built into Bitcoin's code by the one and only Satoshi Nakamoto. And then that too is our retracement of the move. So we have a powerful move to the upside. We retrace roughly 30-something% of that move. And then we bottom out. There's no more sellers. And then we continue to the upside. Our next move now, let's pay attention to that one. Again, we have a green Fibonacci in place here. I'm going to brighten that one up here. So now we have our next move, which was from that low at like $145. And then we go up and put in our top in 2017, roughly, 4-year cycle once again, from the top here in red to the top right here, almost perfectly 4-year cycle. This top was in December of 2013. This top was in December of 2017. You could argue that technically the top was somewhere between November and December, but regardless, that makes no difference. It was roughly around December, and then 4 years later, roughly around December. So we're seeing, a 4-year cycle basically taking place, which is what's written into the code, which makes perfect sense because it's written into the code. So now here from the low to the high is our next green Fibonacci, and we see that the retracement that we see of that move from 146 to 20,000 roughly, we see the pullback from that level takes us almost perfectly to the 382. So it's a 38.2% retracement of that next move, which is also the 3 of our macro 5 Elliott wave cycle to the upside. So the first time we had a pullback between the 236 and the 382. Now here we see a pullback perfectly to the 382 on the monthly based on this Fibonacci. And then once again, if we just we're going to zoom this one out here. it's also worth note once again that this is our 236 level right here, and this is where Bitcoin based out for months and months and months throughout the bear market before finally breakdown capitulation to the 382. So we actually consolidated at the 236 for some time, and then eventually had that powerful breakdown, put in our bottom, and then we were able to resume, into our cycle and the next bull market. So that was to our 382 level right here. So let's do the exact same thing we did last time as well. Let's look at our red retracement right here. So from the top of that 3 to the bottom of the initial push down right here. And then we see that the retracement back to the upside in red. And again, I'm going to make this a little darker or a little more clear. We see that the retracement from the top to the pullback took us once again back up almost perfectly to the 618. So we see the initial retracement to the downside was between the 236 and 382 of the first wave. And then we see that the retracement back to the upside was to the 618 of the initial move back down. And then we see on the second wave, or 3 of our Elliott wave structure, we see once again that we had a retracement, a bounce perfectly off the 236 back up to the 618 of the internal retracement right here, and then continue down to the 382. So we see that Bitcoin has done almost the exact same thing both of these 4-year cycles, almost exactly to a T, within a couple of percentage, even though the dollar amounts, the values of each of these moves has become exponential because these moves are so powerful to the upside. So again, we'll take from the top of that 618 retracement of the internal move down, and we will project that out to a Fibonacci extension based on our yellow Fibonacci right here, just like we did for the first wave. And then we see again, where does that take us down to? It takes us initially to the 1.618, almost to the 2.0. So again, we see almost the exact same move take place at 200%, or twice the move to the downside from the initial move back up, which was the retracement of the 618, which was the retracement of the macro move of the initial push down, and then the overall move of the 382. So once again, we see that both these instances, Bitcoin did almost exactly the same thing. And that is definitely worth noting, because now when we look at this third instance and we pay attention to what is happening, what is potentially going to happen, we can now look at it and say, not with certainty, but with some degree of certainty or some facts or some math or some science, what is likely to happen now. So what is likely to happen now? Well, that retracement then, that's the top of the 3, or our second wave to the upside. The 4 is the retracement of the 3 in the same way that the 2 was the retracement of the 1. So now we have one 4-year cycle with a 2 retracement. We have a second 4-year cycle, which is the 3 with a 4 retracement. And now here we're in the process of, playing out or completing, or whatever you want to argue, the 5th wave of our 5th wave cycle to the upside. And after the 5th wave is complete, what would we expect? Well, we would expect a retracement from the bottom of the 4, or the retracement of the 3, to the top of the 5. So this is our 5th wave to the upside. We don't know confirmed yet for a fact, 100% certainty, that Bitcoin has topped out. We do not know that. We can only speculate right now based on price action, based on what has happened in the past. So here we see that that push took us up to our recent 69,000 high. Okay, so if we assume now, if we speculate, if we, use that as a data point and see what would it look like, what would happen, what could we expect if Bitcoin has topped out right now, which we do not know with certainty, but we can speculate on. Let's look at that and see what will happen. So here's from the 0 to the top of the 5 right here, or our final wave of the 5-wave Elliott structure. So now here we had an initial push down, but that was before we put in a new all-time high. So we can't actually validate this push down to the 236 because we actually took out that high and saw a continuation to the upside. So now if we were to push down here again, we would expect that that potential push would take us to our initial target, which is the 236. So that 236 target is 32,950. So we'll just call it 33,000. So for our initial target to the downside, assuming that this 5th wave is over, assuming that this cycle is done based on our 4-year cycle, based on math, science, Bitcoin code, and facts, assuming that this is done, we have our target right here. Actually, I'm going to turn it blue so it's a little more visible because we have those green Fibonacci's right there. It's a little hard to tell. So that is our potential target, the 236 in bright green right here. So then we know that every other time previously, once we topped out, we hit the 236 and then we came down almost to the 382 right here. We came down perfectly to the 382 right here. So what could we expect? Well, at least a push down to the 236, potentially a push down as low as the 382. So where would that 382 push take us to? I'm just going to use this one right here so it's not confusing. That would potentially take us down roughly to 20,634. So that is roughly our 20,000 level. So we know that our initial macro targets to the downside are roughly 33,000 and roughly, let's say 20,600, or let's just say 20,000 or 21,000. So based on what's happened previously, we could expect that the retracement of our fifth wave would take us down to one of those two levels, or honestly, eventually both of them. So we would fall down here and base out, have a pushback to the upside. Where would that pushback to the upside likely take us to? Well, based on what's happened in the past, again, this is speculation because we don't know because this has not happened yet, but we would take from the top right here to our initial target, which is the 236, and then that would give us a Fibonacci retracement back to the upside the same way that it did previously, and we're just going to put that in red, and I'm going to make it nice and thick and juicy. That would give us a push back up from our initial push down to that 32,600 level back to roughly the 618 target, which would be a push back up to roughly 51,754. So is it realistic that we have a push down here? And again, I'm gonna go ahead and, you know what, I'm going to wait a second to put this on here because I don't want it to be too confusing. But that would be our potential top. This would be our initial push down. This would be the internal retracement or bullish retracement of the bearish dump. We would confirm that we have put in a top on our fifth wave structure and that this bull market is in fact still part of the 4-year cycle and has completed. And then we push back up, we get a 61.8% retracement, and then we see continuation to the downside. So once again, we have to assume, because we don't have these data points printed yet, that pushback up would take us roughly to the 618. So now once again, we're going to extrapolate to the downside what that move would look like for the pushback down. And we know that previously, based on the 2 times we had that happen before, here we came down to the 2. You know what? I'm going to make this yellow so it looks the same. Here we came down to the 2, the Fibonacci extension 2.0. Here we came down below the 1.618, but not quite to the 2. So here we would expect the same thing to happen. Roughly come down to the 1.618, possibly to the 2. And where does that line up at? Well, the 1.618 is roughly 24,586. The 2 is almost exactly at 20,000, basically 800. So again, we're seeing confluence once again, not only with what has happened previously, but with our targets for the Fibonacci retracement on the way up, as well as our potential Fibonacci extensions and internal retracements on the way down. So while none of this is factual yet, we don't have these data points for sure. We don't know 100% if this is going to happen. We know based on our previous data points, based on Bitcoin's code, based on the 4-year cycle, based on actual facts, we know that the likelihood of this taking place is far more likely than any of these other situations that anyone is considering or discussing or anything, because they're just speculating. They're just, selling hopium or whatever. We're talking about actual things that are taking place. So now what would that look like if this was in fact a 5-wave retracement taking place? Well, what we would pay attention to, based on Elliott wave, based on what we're seeing here, we would look now for a 5-wave Elliott wave impulse to the downside. Why do I say a 5-wave? I thought Elliott waves had a 3-wave impulse to the downside. Well, we'll get to that in a minute. So this is our top right here. Our initial push down would take us to the 236 roughly. We talked about a bounce back up to roughly the 61.8% retracement internally to the move back up. And then after that, we would continue our move to the downside, potentially to our next target, which is right here at the 382, which was that 20,800 level based on our Fibonacci extension target of the 2.0, as well as our internal retracement of the 382 of the wave 5 structure. So then when we bounce back to the upside from there, is that the bottom? Are we done now? Did we just put in our A, B, C correction and now we go bullish? Maybe. But now this is when things get a little tricky. And I'm just going to slap these last 2, waves on here for a second, just so we can talk about something else. So what we see happen right here, and what I've been talking about for some time here, is this taking place. And this is called an expanding flat. And I'm going to switch this one over. I know it's getting to be a lot on here, but we really got to just pay attention to what's taking place. I'm going to turn this one to, let's go to, I don't know how well that's going to show up. Let me turn this one to, there's so much on here already. Does that yellow show up pretty good? Yeah, let's use the yellow, and we'll see how that shows up. And I'm just going to kind of move this white one out of the way so it's not like blocking what we're looking at. And then let me just move this to the front here. Okay, so now here we have basically our top took place here. This was our initial top at like 65,000, let's say, roughly. Well, what an expanding flat is basically a correction, but instead of the correction being internal and just going like A, B, C to the downside, in an expanding flat, what takes place is actually you have an initial pullback and then you have a B, but the B actually takes out the top of our wave. So while this is technically an internal retracement, we actually have the retracement go higher. The pushback to the higher goes higher, pushback to the upside goes higher than the initial top. So once we put in that top, we then have our C wave take place and push us back to the downside. And in that structure, in that move to the upside, what happens is we get an A, a B, a C to the downside. Then we get an A, a B, a C back to the upside. And then we get a 1, a 2, a 3, a 4, a 5 to the downside. So this is a very specific, very abstract, very obscure correction. It does not always happen. It's very rare, but it does take place. And we've seen it take place actually before on a Bitcoin chart specifically. And we will actually talk about that in a little bit. But again, we're doing a deep dive on Bitcoin because we're getting towards the end of the year and we're getting towards potentially the end of the cycle. And it's very important that we have the big picture as we do this. So now we have potentially the reason for this 5-wave structure. We have some potential targets to the up and downside. A couple things worth noting. So potential targets for that expanded flat, pullback, etc. So now let's zoom out here and talk about something else that people don't understand typically. When you have an Elliott wave 5-wave structure play out, and we have our 1, then we have our 2, our 3, our 4, and then our 5th wave completes. What happens initially is we retrace the 5th wave the same way that we retrace internally of the 1st wave with the 2nd wave, the 3rd wave with the 4th wave, and then we have an internal retracement of the 5th wave with an ABC correction or something to that effect. But what happens initially is we retrace to the 236, have a bounce back to the upside, we retrace to the 382 of that 5th wave, and then something strange happens. Instead of just retracing inside of that 5th wave, we actually put in a macro retracement from the bottom of wave 1 or the 0 point all the way to the top of wave 5. So we actually have a macro retracement of the entire 5 waves. And this is where people get wrecked. This is where everyone loses all their money because everything trades so technically and it does so phenomenally and they're measuring it out and the extensions and all this and it's working perfectly and they expect it to continue happening. And then next thing you know, you hit the retracement, they buy the dip, it starts pushing back to the upside and then the dip takes a dip and then it pushes back to the upside and then you double down and then again, you go even lower. And that's when people get wrecked. So what happens during that 5-wave retracement? We retrace all the way from the bottom to all the way at the top. And that is our blue Fibonacci that we have right here drawn in. And that is going all the way from the bottom at basically $2 or a penny or whatever you want to call it, all the way to the top at, our whatever you want to call it, $70,000, $69,000 target, etc. So we're going from a penny to $70,000. So now we're going to retrace. The initial push down is the 236, the minimum Fibonacci retracement of that entire 5-wave structure. And that's what we see here in blue. That is where the white retracement is coming down to. And that's our target of $6,714. Will Bitcoin ever get to $6,714? Probably not. But do we have a legitimate road that could take us there? Is it possible? Yes, it 100% is. A matter of fact, it's actually possible that we have a 382 retracement of the 5-wave structure, which is still bullish on the macro. And then we see, continuation to the upside. But that 382 would take us down to actually to $1,465. Is that probable? Is it likely? No. Is it possible? Is there a road there? Yes, 100%. What happens? Bitcoin gets banned by everyone. They tax it. They make it a crime. You can't have it. You can't transact with it. You can't get it off the blockchain. I don't know what the news is going to be. I don't know what the future looks like. I don't know when this happens. None of that. But I'm saying there is a road there. It is possible. Okay, Bitcoin gets hacked. Someone breaks the chain. Everybody works together and all the miners break the chain off, and then there's a sub chain and people don't know what's the original chain and it goes in a different direction and we see a hard fork take place and the Bitcoin community is in an uprise because, Craig Wright, fake Toshi, like won the world and he's the man now. And he says, I made Bitcoin. I'm such a... I don't know what's going to happen. Maybe the initial Bitcoin wallet with 1 million Bitcoin on it moves and everybody gets scared. I honestly don't know what would happen. I don't know what it would look like in the news. I don't know what the FOMO or the fear. I don't know what the FUD would be. None of that matters. None of that matters at all. What matters is what we're talking about here and the road that could potentially take us there. So that's our 5-wave structure. That's how this potentially could play out. That's some potential targets, some bearish targets to the downside. And you say, but you're bearish. You just hate Bitcoin. You missed out. You had your chance to buy it, and now you just want it to go lower so you can buy it, and you'll never get our Bitcoin. And the whales are accumulating, and there's no Bitcoin available, and there's only 21 million, and there's only 1 million left. And the Citadel, and the blah, 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 blah. Who cares? Who cares? Not me. I don't care. But now let's look at this actual cycle and see what this means now. So the same way that we had these mini little cycles taking place within our macro picture, let's look at the actual macro picture. So now we have a 0 point down here, and then we have a 5-wave structure, and then at the top of that 5-wave structure, we now have the 1. The same one that we had here, but a macro 1, and that's in white right here. So the same way we had our blue initial wave up here, and that was our 4-wave structure, and then we had a 2 retracement, we now have a 1, and then a potential 2 retracement in white here. And now what happens after that? Well, the same thing that happened last time. Now we continue to the upside. Our 2 ends, the correction of the 1, which was actually the 5-wave structure of the 4-year time cycle analysis since Bitcoin's inception to its basically like 12-year period roughly. And then we put in our 2, and then we continue to the upside. And then we can extrapolate to the upside our Fibonacci extension targets based on our initial pullbacks of the wave 2 pullback here, the wave 4 pullback here, and then, basically our correction pullback here back to the 236. And then we can start to extrapolate out into the future what our next cycle would look like. So the same way this was a 4-year cycle, 3 of them took place, and it's a roughly 12-year period to our pullback. We could then expect that our next 4-year cycle high would take us up and be a portion of essentially this same thing taking place. So while the time cycle analysis doesn't quite line up here, we could expect something along those same lines to take place. So what would that look like? Well, it would look like probably another 1, and then a 2 retracement, and then a 3 push up, and then a 4 push up, and then a 5 push up. And those 5 parts would basically be the 3. In the same way that this initial 12-year cycle was the 1, we would now expect that to be the 3. So we have some Fibonacci extension targets in place based on those previous all-time highs. And then essentially what we would be looking at, the same way we had that initial blue push up there, we would be looking at basically something like this. And then this would be our second, or the third wave, but the second 12-year cycle to the upside in Bitcoin's existence. So again, this 5 waves that I've just drawn here, it looks small, but only because we're on log scale. But that is actually the equivalent of these initial 5 waves that we had here. And those initial 5 waves make up the 1. The 2 is our pushback down. And then we see another 5 waves, and that makes up our 3. And if we were going to take into account time cycle analysis and try to make this accurate based on what's happened previously, it would probably be, let me pull that back really quick. It would probably be something like this taking place, roughly. So if we know that this initial 12-year cycle was the 1 of the macro, and then we have a 2 retracement, we don't know how long that's going to last or anything, but then we have, again, another 12-year cycle push up to the upside, roughly, depending on how long the actual retracement takes place, that would take us roughly to, 12 years into the future from the bottom in 2023 of March, roughly, again, just extrapolating out based on data. That takes us out to 2033. That would be another 12-year cycle playing out. And that gives us a target to the upside of the 3, which is the second bullish wave in our 5-wave Elliott structure to the upside. And that gives us a target of $1,532. So you could get mad at me when I say that Bitcoin might go to 20,000 or 10,000 or 6,000 or 1,300. But don't get mad at me for saying that if you're not going to get happy with me for saying that Bitcoin has a path to $413,000 by 2033. And you say, yeah, but the lengthening cycles and the this and that. I don't care. None of that matters. What matters is there's an actual path that we have drawn out right here with potential to reach $433,000. That's what matters. So now this is what this would actually look like, based on the time cycle analysis, based on our different tops along the way, roughly. This is not going to be perfect. I'm obviously just kind of slapping these on here, but giving us a rough target of what those cycles would look like. So again, we would see another 4-year cycle peak, probably somewhere just under, the top of this peak. And then we would see a 2 retracement after that. And then we would see a 3 pushback to the upside, put in a new all-time high. And then again, a 4 pushback, find support around the top of the 1 or the previous top from this bull cycle. And then again, new all-time high taking place from there. And that would give us our $400 and whatever $1,000 target. And then again, we have another retracement the same way that I'm expecting a potential retracement of the completed 5-wave structure. And that is the 2 retracement of the 1 of the macro Fibonacci to the upside. We are now extrapolating, keep in mind, 12 plus years into the future. So the reliability of these numbers is less likely. But we know that Bitcoin has operated very technically. Essentially it's operating in a mechanical fashion based on Fibonacci extensions, algorithms, and the market makers are clearly doing the same thing we're doing. So while these numbers will not be accurate to the dollar, I think it's safe to assume that based on what's happened previously, based on what's likely to happen in the future, that these are legitimate targets to the upside. So we then see after the retracement of the 4, which would essentially be the period of time that I think we're essentially about to go into right now, which is the retracement of our initial 12-wave structure. We would expect once again an initial retracement of the 12-wave structure. We don't know how long that's going to last. That could easily last an entire cycle without putting in a new high, an entire 4-year cycle without putting in a new high. It could easily happen. We don't know that, so I'm not going to assume that that will take place. But essentially, this could be pushed out, instead of hitting $430,000 in 2033, maybe we don't hit it until 2038. But then after that, we go into our retracement of the 5-wave structure, and then finally we complete the 5th wave of our 5 waves. So the same way that this was our wave 1 and we had a 2 retracement that we're potentially getting ready to go into, we would have a wave 3 to the upside with a potential retracement of that wave 3 to the upside, taking us to 430,000. And then that gives us finally a Fibonacci extension target of a 2.618 retracement, roughly based on, what we're looking at right here. We're only extrapolating out what potentially happened, but that gives us somewhere around a $2,370,000 Bitcoin. So just hodl, I guess, right? Let's just hodl till 2042. Who cares? It's only 20 years, right? And then $2,370,000. Well, what is a dollar worth in 2042? How much extra could we have accumulated? How much extra money? How much extra Bitcoin? How much extra by playing the waves inside the market? Well, that's the difference between investing and trading. This is investing in technical analysis. Or trading with technical analysis. You can fundamentally invest in something because you're like, I believe in Bitcoin and it's the best. So I'm just going to buy and hodl. Sure, that's investing. And it's tough to invest in crypto because there's no actual earnings. There's no, measurable value. We only know what someone has recently paid for it and what someone is potentially willing to pay for it. And then, potential targets based on taking things like the entire money supply if we go into a Bitcoin standard, or some magical number that we like $1 million or whatever. So this is actual technicals. This is actual math. This is actual reason based on what's happened in the past and a road to essentially $2 million plus dollar Bitcoin. And, some kind of time frame to it. Maybe we don't get there till 2050. Who knows? But at least now we have a legitimate way of measuring and potentially expecting these targets to play out. So now let's zoom back in here for a minute and then we'll take a little break. I will engage with you guys in the chat. I'm not sure what you're typing over there, but I see you guys typing. But let's take a shorter term look at what's taking place now. And let's talk about that expanded Elliott wave correction flat that we were just talking about. So again, that was the top of our B. So we have our top right here. We have the A is a retracement. We have the B, actually gives us a new high. And then we have a C, which is our drawdown, which then puts in a new low. And if you're not familiar with that, for you group members, I have posted up the definition or description of the expanded Elliott wave flat correction in the group tools. So you can have a look at that. But essentially what that does is it takes out, the B takes out the top of the fifth wave, and then the C takes out the bottom of the A. And then we see we have inside of that internal wave, we have a couple things that are required to take place. So we have an initial ABC correction taking place, something like this, a B, and then a C to a new low down here. Oh, did I hit the wrong one? Oh, no, I just started a new one, sorry. Little misclick. Don't judge me. What the hell? Oh, you know what? I'm sorry. I picked the A through E one, not the A through C one. Okay, so there we go. There's our A, our B, and then our C. And again, you can go by a wick down here. Here's the wick. You could go by the close. You go by whatever you want. You know, that's fine. You could argue for either one, whatever. So that is our initial ABC to the downside. So I'm going to make that one a skinny. And then we have inside of that A, we have an ABC. And then we have a push up from there. And then inside of, this is our B to the top right here. Once again, we have an ABC take place. So, you know, depending again, obviously where we start at, whether it's the close or the wick, we have an ABC take place right here. So far this looks pretty good, looks probable. So there's our ABC of the B. And then the next thing we would expect to happen is what we were discussing, which is the 5-wave retracement inside of the C, which gives us that breakdown not only of the initial retracement of wave 5, but then also the retracement of the 5-wave structure. So where would that take us to? Well, we know the initial 1 is going to take us down potentially to like that 33,000 target. The 2 would push us back up to roughly 52,500 target. And then again, we see our third wave would take us down to, you know, essentially that target of the 382, which is 20,000, which obviously is our previous cycle high, which at that point in time, no one in their right mind would expect Bitcoin to violate, because no cycle top has ever been violated by the previous low of the next cycle. So we know here, based on our initial 4-wave cycle, we came up, we put in a low, then we have our wave 3 cycle, we come down, we don't even come close to violating the top of the previous one, and then here we would come up and put in the 5. So the last thing anyone would expect is for us to violate that $20,000 level, because it's never happened before. So we come down to it, we get aggressively bought back up, we push up to the upside, we find resistance roughly at this level of 32,500, which acted as support multiple times along the way. We can't break back above it because too many people are selling into resistance, which was previously support, and then we get a pushback to the downside, and the final completion of the 5 waves of our retracement to the downside, which is actually the C. So maybe instead of just coming down here to that $20,000 level, the C actually comes much lower, somewhere down here to like that $6,800 level, which corresponds with the 618 retracement, corresponds with the macro 236 retracement. You know, we don't know. We don't know exactly what's going to happen. I do know that when this happens, if this happens, if we violate these levels, people are going to say Bitcoin's dead. People are going to say crypto's dead. People are going to say it's done, it's dead, it's hacked, it's broken, it's useless, it's failed. There's going to be tons of FUD out there. No one's going to believe in Bitcoin at $7,000. No one's going to believe, less people are going to believe in Bitcoin at $20,000 than they do at $30,000. There's going to be a lot of buyers come in at $30,000, but then if we top out at a lower high, people are going to say, whoa, maybe we're topping out here. And then less buyers are going to believe at 20,000 that did at 32, but it's still going to be a strong support because it was a previous all-time high and we've never violated that before. So then we push back up here, and then unfortunately, you know, market makers, whales, whoever sells into this move expecting lower prices, because now it looks like we've confirmed a downtrend, because we have a high, we have a low, we have a lower high, we have a lower low, and now we put in once again a lower high, confirming that we're going into a macro downtrend, and then we violate that $20,000 level. Everybody talks about how Bitcoin's dead, but in all actuality, we're sitting here waiting in the dark like an alligator with our night vision, ready to snap up every little bit of Bitcoin, whether it's at 65,000 or 7,000, whether it's at 1,500. We don't know where it's going to come back down to. We don't even know it's going to get there for sure. But I'll tell you one thing we do know. We know that there is a path to those price actions. So while I'm not sitting here saying Bitcoin's going to $1,500, sell all your Bitcoin, give up, quit, I'm saying there's a legitimate path to those prices. The same way that there's a legitimate path to a $2.5 million Bitcoin and a time frame of, roughly whatever we said, 2045 or whatever. So that is our macro breakdown on Bitcoin. That is what could potentially happen. That is what I'm paying attention to on long time frames. I'm not necessarily expecting that. I'm not necessarily predicting that. But there is a road to it based on actual math, based on the actual code, based on the previous cycles. So while I might not always tell you what you want to hear, I might not always make you happy, I might not say Bitcoin to $1 million in 2022, I'm also not selling you anything. I'm not trying to convince you to buy Bitcoin so that my bags go up. I don't hate Bitcoin. I don't love Bitcoin. I love the idea of Bitcoin. I love the idea of freedom from our current financial system and the oppression of money printing and fiat currencies and everything. I love the idea of it, for sure. Am I sure that Bitcoin is the answer? No. Am I going to continue to make money off of Bitcoin and crypto? Do I believe in blockchain and the technology that it offers and the future of digitized money? Of course I do. Of course I do. 100%. But is Bitcoin the answer? Is Ethereum the answer? Is Solana the answer? Is Avalanche the answer? Is Dogecoin the answer? Is Shiba Inu the answer? I don't know. No one knows. No one knows. There's a handful of disruptive technologies ever in the human race. So the odds of us sitting here and picking one and saying Bitcoin will win because it was first. Sure. Who uses the first cell phone? Who still drives the first car? What was the first internet? What was the first browser? Is anybody still using the first computer? No. So if anything, that argument tells me that Bitcoin will lose in the long run. I hope I'm wrong, but we'll see. So trying to pick a disruptive technology when there's now over 10,000 cryptocurrencies, trying to pick the winner is foolish. It's ignorant. It's arrogant. So we don't do that. We use the technicals. We look at some fundamentals, and then we make educated, measured bets, trades with definable targets to the upside, definable targets where we know that if price action moves in this direction, that we were wrong about our thesis, and that's our stop loss, and then we can re-enter at a later date, reevaluate the situation, etc. So that's what we do here. We're like mechanics, okay? We take out our wrench, we work on something. Occasionally, we try to fix something and it doesn't fix the problem. So we step back, we look at the big picture, we reevaluate, and then we fix the next thing. We make the next trade, we make the next investment, etc. But we don't get emotional. We don't get clouded by hope or dreams or fantasies. We don't let our faith take over. That's not what this is. I have faith. I have faith in things. I have hope. I have hope for the human race. I believe in things, but not technicals. I don't hope. I don't have faith. I don't have emotions. I don't believe in what I want to happen, because that's not how you make money. And that's what we're here for. If you're not here to make money, there's somebody else out there that will tell you how cute your kids are. They'll tell you how great your investments are. They'll tell you how handsome and pretty and how strong your crypto is. There's plenty of cults out there. Join a cult. This is school. We're learning here. We're getting better. We're sharpening our knives. We're adding tools to our tool belt. It's education that will serve you for the rest of your existence on this planet. Will serve your family, your friends, those you care about, because it will help to make you wealth. It will help to give you knowledge that will be useful into the future so that you can do everything I do, maybe even better than me one day. Maybe better than anyone. But it doesn't matter. You don't have to be the best. You don't have to beat everyone. But if you can beat 90% of the people, if you can beat 60% of the people, if you can put your emotions to the side and you can be like that mechanic who just pulls out his wrench and fixes something, and most of the time he's right, but sometimes you're wrong and you just fix the next thing and keep on going. That's what trading is. That's what investing is. And that's what this is all about. It's about education. So I'm not saying don't watch those guys who have funny memes and cool targets to the upside. And you can sit there and say, I have $100,000 invested in crypto, and if he's right, I'm going to have $10 million or $100 million, and I can buy this mansion, and I can buy my mom a house, and I can get, this surgery for this person I care about, or this car, or whatever it is. Whatever it is you want, whatever it is you dream about. That's okay. It's fine to have hope. But there's plenty of other channels for that. This one has helped you learn to be better. Better as a person, better as an investor, better as a trader. But remember, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. So please do your own research and trade responsibly. This is our Bitcoin deep dive. We have legitimate targets to the upside. We have some potential targets to the downside, potential targets to the upside, time cycle analysis. But all of this is based on facts. All of this is based on science, math, previous price action, potential future price action. But it's not hopium. I'm not selling you a dream. I'm not lying to you. I'm not pissing you on you, calling it rain. This is real shit. And we'll see how it plays out. And we can see how it plays out. We can do hindsight TA on dozens of assets, hundreds of assets, thousands of assets. And we can see how this exact thing has played out over and over again in different asset classes. And the same people that were making money using Elliott Wave and using these same techniques, Fibonacci's, extension targets, moving averages, those same people, they're still in charge. They're the ones who had the programs written or wrote those programs themselves. They're the ones that are market makers. They're the whales. They're the big dogs. So what are we doing? We're the guppies. We're swimming in their, wake, swimming in their little slipstream. We're following them. We're not billionaires. We're not trillionaires. We don't decide where the market goes. But what we do, we follow their breadcrumbs. We follow their little trail, okay? And when the elephant says it's time to move to the upside, we get on his back and we ride the wave. He says we're going back to the downside, we get the fuck out of the way so we don't get stepped on. But again, we're at an inflection point. So to me right now, it could go either way. If you ask me right now, do I think Bitcoin is going to go up or down and put in a new all-time high or go below 30,000? I would literally tell you at this point in time, in my opinion, it's a coin toss. If anything, using 4-year cycles and Bitcoin code, I would tell you it's more likely we go to the downside. But I would in no way whatsoever be surprised if Bitcoin puts in a new all-time high and we see continuation into January, February, March. It would not surprise me. It would not surprise me if you came back from the future and said, it's March of 2022, Marty. I came back from the future. Bitcoin's at $100,000. The cycle is still going. It's on. I wouldn't be surprised at all by that. I would be surprised that you show up in a DeLorean, with gray hair and call me Marty. I would be surprised by that. But I wouldn't be surprised by the price action. But in the same sense that if you came back from the future and you told me, hey, Bitcoin is at 30 grand right now or 28 grand, and that was the end of the 4-year cycle, and now we're going into an elongated bear market that's going to last longer than any bear market has ever lasted in the past, and we're going to violate the previous all-time high of the previous cycle 4 years before this. Again, I would not be surprised at all, because those are two very high probability scenarios that happen over and over again in technical analysis, and I could show you dozens or hundreds or thousands of charts where both those scenarios play out. So, and that's what we're going off of. That's all this is, just a bunch of patterns that have played out a bunch of times, and they played out notably enough times that we can put a probability on it. But at this point in time, we're at an inflection point. We'll know very soon in the next couple of weeks, or days or months, if Bitcoin is going to be bullish and continue to the upside, or bearish and continue to the downside. But right now, in my opinion, it's a coin toss.